I'm very excited to introduce our guest here today, another California industry pioneer, to talk about some of your insights and experiences in cannabis financing. So let's just kick it right off. I just want you to tell me a little bit about yourself and your background and what brought you into cannabis investing.
Well, thanks, Mary, and thanks for having me. We're happy to be here. We just attended the last conference in London, and that went very well, and we'll be at the conference in Zurich. We find these conferences very informative to aggregate all the information that's coming in through the European markets and basically everywhere outside of the United States market. But we were the first dedicated lender in the United States that was privately held, doing bridge loans to cannabis use, specialty use properties in the United States. Prior to entering cannabis, we've done 5,000 transactions for over $5 billion. We had the skill set when our local congressman, Dana Rohrabacher, passed the Rohrabacher-Blumenauer Amendment, which in the United States was the most consequential legislation ever passed that nobody ever talks about. That legislation defunded the Department of Justice from any prosecution of a cannabis-related business. So when Congress used what we call the power of the purse to take away the money from the Department of Justice from prosecution, we quickly realized this was the largest newly created asset class in the world. Of $50 billion is now what we have been able to project out, that just the real estate asset class in the United States. So we started lending in the sector by 2016, and today we've done 69 transactions for $435 million with 34 payoffs. We've originated more transactions, had more payoffs than any other lender, and we've seen over 2,000 transactions in just the cannabis sector. We've also aggregated all that data to have the most robust data sets of anybody in the world.
Wow, that's incredible. Thank you for giving us that great background. It seems like 6 years is a short time, but in cannabis years, it's a very long time. It's been about 10 years since the United States started really getting into commercial cannabis for personal legal use. 10 years into it, knowing what you know now, is there anything that you would have done differently when you were getting started?
We're on the real estate side, so we're not owners in the cannabis equity businesses. So we tried to move into it as early as we possibly could. 2014 was the year that legislation passed. We were actually trying to lend in 2014. We just couldn't get our third-party service providers, title insurance, property insurance, our investors, our legal teams, our compliance, our errors and omissions insurance to sign off on it. And, being a leader in an industry is not always about doing things in the most center of a circle, of it being the safest in the center. Sometimes you need to be all the way to the edge of the outer perimeter of that circle where you're on the edge of risk. And so that circle of what risky is and what is being on the edge is something that, as you're a leader in an industry, you're constantly redefining that. And your Polaris was the one that was establishing, getting the first FDIC-insured warehouse lines of credits, getting the first investment credit grade ratings in the industry, getting the first institutional investors as a privately held fund. So, the risk is perception. And if you have the data and the facts to back you up, you can continually move that risk perspective out as long as you're shoring it up with facts and data to de-risk the downside of it.
Okay, well, I'm glad you brought up risk because I actually wanted to talk to you a little bit more about that. Obviously the economy is in a difficult place right now. We've got global inflation. What are you doing to mitigate that risk? I know you're speaking about a lot of data, but what else are you doing to mitigate the risk?
Sure. So there's two sides for us. There's the borrower side and how we look at risk there, and then there's also what we're doing to offset those costs on the investor side or the fund administration side. So for the borrower side, we want to underwrite each of these transactions. So we look at the real estate as one part of the equation. So we call that the property company. And then we look at the cannabis business side, the the operating company. And so for the operating company, when we look at these transactions, we want to look at make sure that they're an existing experienced operator. We can't afford to work with somebody that's just getting in the industry. It's too complicated of an industry for us to take that risk, or for our borrower, the property owner, to take that risk. But the second thing is for that real estate, it has to be specialty purpose built for cannabis use. And that requires certain licensing, specific tenant improvements, specific equipment, specific power, specific water, all of these things. And so what we want to do is we want to underwrite 100% of all the costs that are necessary. We can't leave anything to guess or speculation. So when we do an underwriting of a transaction, we want to understand what's the total cost for the property purchase, what's the total construction cost or tenant improvements, and what is the equipment that is necessary to get that facility up and running. We underwrite 100% of what the costs are required to get that all the way to being a cash flowing facility. And then from there, we'll typically lend up to 60% of that. So the borrowers need to know that they need to come up with 40%. But the difference between us and a traditional bank, and by the way, we'll talk about banking in a second in the U.S., the difference with us is we're a cost basis lender, so we're going to look at that 100% cost basis of all those things, the acquisition costs, the tenant improvement, construction, and equipment. We're going to count that as 100% cost basis, and we'll go up to 60% of that. Whereas banks or other lenders are only going to look at the real estate value, and 99% of all of them are going to look at what's called the alternative use, which is not cannabis use. And so that value is probably going to be half of what the valuation is. So there is traditional finance in the U.S. There's 704 depositor, FDIC insured, federal and state banks out there. There's 4 dozen banks that are traditional banks that are lending, including ours in the United States. So believe it or not, as much as you may hear differently, out of the 2,000 transactions we've looked at since 2014, we've never seen one transaction that didn't have banking in place. If it did, it would be a massive red flag to us. So there is banking out there. It's typically state banking. Any bank in the U.S. can accept cannabis deposits if they wanted to. They just don't have the compliance to risk their banking license to accept that. The banks that are doing it, they have their own specific compliance department for each state. They're charging for that deposit. So imagine paying money to make a deposit. It's usually 0.2%, and they have higher banking fees. So there's robust banking out there, but we just are trying to, basically all these cannabis operators are entrepreneurs, and our goal is to take whatever equity that you've raised and take it as far as you possibly can, because when you're doing that initial equity raise, it's the worst possible valuation. It's your lowest valuation possible. So we want to minimize what equity you need to raise, and you want to come to us and understand how much equity do I need to raise so that I'm not selling too much of my company too early.
Interesting. That's well, it sounds like your model is working. I really appreciate all that you've done to really help a lot of these companies get a start, because it was so difficult in the beginning to get investors or to get a loan or to get banking. And what drew you into being one of the first when there wasn't really very many people that were already doing it?
Well, I wish I had some awesome story, and some of my partners, we do have stories, but for us, it was more just that we had the skill set to do the building and acquisition of these types of properties. And Dana Rohrabacher is our friend and local congressman in my state. That helps, when that's passing, when we launched our fund, he was on the Congress floor calling in for a live interview when we launched the fund. So nice. that was kind of the genesis for us. But as we've been into it and get further and further into it, we're hearing and we're learning all these stories. And just as a kind of a metric, this is about a $50 billion asset class of real estate once it's built out. There's been about $3 billion put out. Of that $3 billion, we've done $435 million of it. So our facilities are generating probably at least $2 billion worth of revenue coming through the United States each year. And for me personally, the fact that much cannabis is being legally produced, some of those people that are purchasing that are not purchasing opioids. And for me, even if that was just 1% people that buy opiates are now transitioning over and using cannabis instead, that's a win for me. It's an enormous economic driver out there. It's a lot of jobs, and as Nick said earlier, it's resilient to recession and economic downturns. And even during COVID, we were deemed an essential business. None of our transactions had any distress during that time.
That's fantastic. Well, thank you for everything you've done in the United States. Now switching into the European markets, this is a really exciting time. I'm curious what kind of due diligence you're doing as you prepare for a growing European marketplace.
It's hard to do due diligence from a debt perspective when you have no rules. Right. So we're here building relationships, trying to get a lay of the land. It takes time to understand these markets and how they're emerging, and the underlying things that you don't see in the pitch decks and the data sets out there, perceptions and how things will really shake out sometimes takes time. So for us, it's just starting to build those relationships, starting to look at transactions, starting to run those transactions through our modeling to see, okay, this would all work here, but what would we need to solve for that? So for a debt provider, we need to have attorneys that are licensed in those states or those countries. We need to have relationships with regulators. We need to know what do we need to be able to do in the event that we had to foreclose on that facility and we're going to be potentially directly in the business ourselves. And so we have to think all those things all the way through. My job at one point was I was worst case scenario Rob, because I always had to be the one that broke the transaction, the models, to see what are we going to do in these worst case scenarios to make sure that we can unwind that transaction, get it repositioned, and it's sold. So for us right now, we're looking for our third-party service providers, which attorneys. Earlier at the conference this morning, there was 4 attorneys up here, and 2 of them were our attorneys, so I thought that was pretty funny, Denton's and Zuber. But there's other things. We need construction consulting companies to run our feasibility reviews. We need to have, who are we going to be using for insurance? It's a little bit different nuance in Europe than the United States. In the United States, these traditional third-party service providers, errors and omissions insurance, property insurance, it's federally illegal. So there is, in any policy that you traditionally get, it says that it's null and void if you break the law. And so you need to make sure that you're, in the United States, that you've got those carve-outs that they acknowledge that as long as it's legal in the state, that the policy will still be enforced. So we have to understand how these things are going to work. And the biggest question I've been asking some of the people I've been speaking with already at this conference and the one previously is, I personally and all of our team really need to get comfortable with these facilities, and we only do indoor facilities, production facilities. We don't do any agricultural deals. So that's a farming lender, and that's not what we are. So we'll only be doing cultivation, testing, distribution, dispensaries, things like that. And we need to understand, we know how much it costs to build these facilities. We've seen these facilities, and when you're putting out 10, 20, 50, $100 million into a facility, that is an enormous CapEx expense. How are you going to recover that CapEx and be profitable when you can import from countries that have lower CapEx and OpEx costs? And that's the biggest one we're struggling with right now. Mm-hmm. And it's not that it's unsolvable. We just need to understand how we get comfortable with that. Because if we can't get comfortable with it, we certainly aren't going to be able to get our investors comfortable with it.
Oh, yeah, that's for sure. Now, I'm also really curious, as this market blows up, and how that relates to the U.S. market, on the U.S. federal time frame for rescheduling, what that might do for interstate and international trade, and if you're looking at that as a way to gauge how you're going to enter this marketplace?
So in the United States, my political prognostication is that there's always a push to get the next bill through the House, and it's the Senate you need to get through. And to get 60 votes in the Senate means you're going to need 10 Republicans. And there's actually 17 Republicans that are identified as being pro-cannabis, but they're not pro-cannabis when you throw every single thing that the Democrats want. And the Democrats are not going to let their trophy piece of what they run on go through unless they get social justice reform and social equity components put in there. And I think that the Republicans and I think the whole industry is okay with that, but the Democrats' problem is they always go so far overboard that you can't keep the Republicans on board. So that I don't see any, my prognostication is it's going to be in the next administration, whether it's Republican or Democrat at best, and that they're not going to see any meaningful reform in the United States. And eventually, we do see it being deconflicted from federal policy or federally legalized. But even if that happens, I don't think that the United States is going to allow importation if it becomes federally legal. And Trulieve is betting that it will be able to be exported. They have one of the most advanced facilities in the world in southern Florida, just in Florida. And that facility is being built to GMP certification so that they could potentially ship it internationally. It's just going to be interesting to see. I do think that there'll be some compacts put together between states that you can cross state lines, but right now I think it's just going to be the status quo. And the further it gets down the line, like in the United States, where you're 38 states with separate compliance for every single state, the harder it is to wind all that back in and make it under one compliant package. I don't see it. So.
Well, all right. Well, that's a lot to think about, obviously. I'm thinking of the importing and exporting and a lot of international trade. We'll look forward to that. In the meantime, there's probably a lot to be said about how you're going to be investing from other countries that are going to be doing trade before we get a chance to do that ourselves with Europe and America. But since we have only just a few minutes left, I wanted to just first ask you one last question and then open it up to the floor to see if anybody else has any questions. For any new entrepreneurs or investors that are just getting into the industry, what advice would you give them?
So we had a lot of investors and raised a lot of capital. When we entered the cannabis space, I had the mistake of thinking that we would be able to use those same investors to go down this direction, and that wasn't the case at all. And the opportunity was passing us by, and we were not able to lend for 2 years. And so I've tried all kinds of different strategies. So I've been on the same side as many of these entrepreneurs as this market has emerged. It's a little bit easier for us to raise debt than you guys because we have a secured asset, but there's not the upside either. And so if I could give a super massive piece of advice is you always hear, try to get as few investors as possible and as big a checks as you can. But in reality, that's a very difficult proposition. And so what I would tell people is don't go the traditional way of trying to raise capital. Try to have the lowest entry point or the lowest size check writer and the most amount of investors, because raising money at $25,000 at a time is going to get you further down the line than waiting for guys at 100,000 or 250 or a million at a time. And you need that basis of capital to get the bigger check writers. So just when you start thinking about how you're going to do your raise, think about your securities offering or your structuring or the third parties that you're going to use to manage your investors in the United States. That might be K1s or investor portals. Just think about using third parties that can facilitate the maximum amount of investors that you possibly can and minimize those investment amounts. It's better to have capital flowing in all the time than keep talking to people and they're thinking about it. You need those checks flowing in all the time. And so we switched to retail investors in 2016, and today we have about 1,080 of those. So our fund is currently about 303 million assets in our management, and it's compromised. It consists of probably at least 95%, it might be 98% of individuals. And so an individual is going to be able to give you a decision within a day or two, because they're their own credit committee. When you start going to funds, when you start going to institutional investors, when you start going to these other people, you lost that direct connection to the person making the decision of being able to pitch your story and answer those questions that they might have. When you tell somebody and they go to tell your story to a credit committee in cannabis, good frickin' luck. Trust me. I mean, we have 4 years of audited returns. We're investment grade rated. We have institutional investors, and still, it's enormously challenging. And I have it a lot easier than most people are because of the history we have. So that would be my primary advice. And another thing too is that you should be using data and facts to educate them. The investment should sell itself. It's not about sales. It's just about educating them, letting them know, what this is going to do, and this is why, and this is how we're supporting these facts based on the information we know today. And that information in facts is going to continue to evolve and change, and that's okay, but as long as you're using facts to back that up.
Great. That's great advice. Did anybody here have any questions? We're going to open it up if you'd like to.
We'll start over there. One more time for Rob Sechrist and Mary Patton.
Thank you.
I have a microphone. Makes it easy.
As a retail investor and as a cannabis company, how would one connect with Pelorus?
You can reach out to us through the app, our website. My email is rob@Polaris Equity Group. I'm sure you can see it in the material. I think we have
We also have the Hoover app,
Yeah.
WHOVA.
or catch me afterwards. I'm happy to give you my contact information.
Okay, question over here. Here we go. I'm coming. Speed walk.
Thank you. As a U.S. multi-state operator, I'm thinking about coming into the European markets. So do you underwrite in the European markets currently? And then the second part of my question is going back to the U.S. markets. How do you feel about the opportunity zones? And is that an area of development within your own business?
Great. So the first one is we are preliminarily looking at transactions here in Europe, in foreign countries. If we land on a transaction that meets all of our metrics that we've established in the U.S., and then we can get past answering some of the compliance or the underlying questions that we're not sure of, we're willing to come here we're willing to lend. The next part is our fund is only authorized to lend within the United States. So then we have to decide, are we going to do a standalone transactions or launch a fund here? Right at this point, there's not enough business for us to launch a $500 million fund here. It just doesn't make sense. We would have dead capital. So we'll probably aggregate a few transactions and then assign those into our funds in the next 3 to 5 years, something like that. But we're here early to get an understanding and build these relationships today. As it relates back to the United States and opportunity zones, in the United States is just a zone where you have really beneficial tax structures. And we are just a lender, so we don't own the property. So the owner of the property is the one that would benefit from the opportunity zone, not us as the lender. But as we do have our own division. We do own lots of projects. We have a whole separate division of the company that entitles projects for cannabis and that builds relationships with the cities so that we can take advantage of those. So we are, and we'll probably launch a fund in the United States that is not an opportune zone focused fund, but we believe that there'll be some repositioning of distressed transactions in the U.S. in the next 12 to 24 months, and so we're positioned to reposition those assets with that fund. But great question.
Wow, great. Anyone else? You guys getting hungry?
Yeah, let's go eat.
Ready for
One
lunch?
more time. Mary Patton and Rob Sechrist.